Sweet Jesus here, Tuesday webinar. We get together every Tuesday. We talk about what we're seeing early on in the week. Maybe try to devise a plan going forward, things to keep an eye on, what we're seeing flow, sentiment-wise, what a lot of guys and gals in the room, in the steam room have been trading successfully, unsuccessfully. And this is, this is for me, I know, okay, for myself, this is the toughest time for me as a trader. It has been throughout my whole career. Okay. And the reason being is, when you're in all out bull mode, as a lot of you know, I'm predominantly long only trader out there. Okay. And when you're in a bull market, a full-fledged bull market, during earnings season, there's some opportunities there. You can play the run up into earnings. Like a lot of you guys know, all last year, Google, Facebook, any of the high beta, the big tech names, there were some serious run-ups pre-number. You didn't even have to take the risk in holding through the quarter. There was a decent opportunity to make on just a run-up into the number, okay? But what happens is when you get out of that bullish phase, and obviously things become a lot more difficult, right? And I think that trade is not there anymore. It's something you really have to be careful of. And earnings season in general becomes tricky for me because I solely go off flow, right? That's my bread and butter. That's where I see clearest. Like the flow will guide me in a sense. And those of you who have been around me a long time know around earnings season, the flow gets sloppy. The flow gets really messy. We know, there's a ton of hedging, a ton of protecting going on out there. So I like to take it easy. And we've been talking about this. We spoke about this on the Saturday webinar. We were open to the public this past Saturday to everybody. And we spent a lot of the webinar just going over how right now, if you can't be as nimble as you like, it's a time to just wait, sit, and allow something to set up. Okay, don't force it. You're going to end up holding something through earnings. You're going to regret it. So wait for something good enough before you just start firing out there. Okay, and for me, I do some swing trading. I'm not swinging much right now, right? I mean, I'm not going to say one thing and do the other. But even for day trading purposes, even for day trading, we came off a rally, as you guys remember. We were talking about this rally here off the lows, right? Okay, and everything set up lovely into these lows. We had both sentiment at a bearish extreme, right? Then we had some bull flow come into that bearish extreme, which set up, in my opinion, a really nice risk reward for at least a tradable squeeze. Okay. And then what happened is once we had that squeeze, okay, this is not 2017. Okay. You can't expect any little rally that sets up like that just to rally onto new highs and into another full-fledged bull run. Okay. That the likelihood of that is not going to happen. So what happens is when you start to see that bearish sentiment dissipate and you start to see some signs of bullishness come in among sentiment, that's a good time to start taking chips off the table, raising stops, but at least hit the brakes, in my opinion, as far as opening any new positions on the long side. Okay. And then what happens is you allow it to set up again. Okay. And you can't get concerned of where you start to do that. You may start to do that here, right? If you feel the profits are okay, you may want to take some risk off or raise stops here. The market may continue to rally on you, and you can't let that FOMO feeling, take your trading over. You just have to try to avoid it and stick to your guns and allow this setup, what we're seeing right now, come to fruition. Okay, and the same thing on the short side. It's just the total opposite. Okay, we went over that too in the Saturday webinar. You don't want to short into the holes down here, into the hole, with bearish sentiment at an extreme. If you're looking to enter a short position, okay, you have to wait for that bearishness to alleviate. Maybe some bulls get in there, get trapped, okay, and then this is where the bulk of your profits are going to come from. All right. And we saw that today. Lucci killed it today. All right. And Lucci's been eyeing this short. Literally, he's been poking at it throughout each and every day over the past couple of days. I mean, he was tempted to do it into strength here. That's how much he was itching. But you guys know how Lucci is. Okay. But that's exactly what Lucci did. He started poking. He caught this and he locked up some nice profits today. All right. So no matter what side you're playing, the playbook in this environment is just that. Okay. On the long side, this is where the bulk of your profits are going to come off. Again, we're talking as traders now. If you're an investor or some longer term trend trader, it's a whole different ball game. Okay. But the majority of us are traders. Okay. Short-term traders. But on the long side, the bulk of the profits are going to come here. You want to start taking chips off the table and the same thing. So that's the playbook right now until we start to see something different. Now, what's something different? Start to see some sort of trend out there. Okay. Not only in price action, but in flow. To be honest, we've been talking about it for quite a bit now throughout a lot of this mess. The flow has been very flip-floppy. Right? When we get into this bull mode, we see some buying come in, but then as soon as we start getting toppy, boom, put sweepers just start attacking. All right? Because that's just the environment we're in. And we try to avoid that getting into any predictions. When you start predicting what may happen, in a way, you're always predicting, right? Even if you're making a play here on the lows with sentiment on your side, there's some sort of prediction involved. But you want to try to avoid as much as possible relying on predictive indicators, okay? And for now, we're waiting for some sort of trend or some sort of trend out of the flow to materialize, and then we could start looking, at some different signs, different signals. All right, so we'll talk a little bit about what we're seeing flow in individual names, but I'll tell you right now, and I said this on the Saturday webinar, I think the flow in individual names right now is as useless as you will ever see flow. Okay, why? Because all the activity, 99.9% of it is earnings, their earnings positioning, right? It's all earnings positioning. And even names, maybe the action doesn't catch earnings. There's probably a name in the group that's reporting that they could be positioning around. All right, so I think sentiment right now is the most important thing, and to look for flow to confirm that sentiment. All right, so that's what we're looking here. We have Tim with us. A lot of you guys know him from Option Trader, those of you in the Steam Room who are members. Again, I don't know the details, how long Tim's been trading and so forth, but immediately as soon as I started seeing Tim trade and the way he was trying to utilize the flow, I knew it was something that I wanted, we were talking, Lucci and I wanted to bring to everybody's attention. Okay, because we try to get out of the mode of that flow being a stock picking service, right? That every alert on the board is actionable and means something. When you're using the flow for anything in that sort of nature, you're not getting the full value out of flow. Okay. And just the way Tim initially, right out of the gate, started to utilize the flow. And listen, he's asked questions along the way. He's an experienced trader. Very easily, he could have, held back. A lot of people have too much pride to ask questions, but little by little, learning more and more and more how to utilize the flow best for his trading style. Okay. He doesn't mirror my trades. He's not mirroring Lucci's trades. He trades his own particular style, and he's trying to utilize the flow, the best he can for that particular strategy. All right, so we got Tim. Tim, say hello just so make sure everybody can hear you over there.
Hey, guys, how are you?
All right, everybody can hear him, just to make sure everybody can hear Tim. And let me get you. I'm going to throw the screen over to you. So this way, let me know if you see something pop up. Hold on.
Yeah.
You should see show your screen, something to that effect there.
Yeah, that's fine.
There you go. Perfect. So before you start, Tim, just a couple of quick questions. About your experience in trading. How long you're trading? How long now, roughly? From start to now, how long are you in the game?
Sure. Yeah, I can give you like a little 90-second background. Yeah, no, I traded a little bit in college in like 06, 07, but primarily been trading since kind of the Ebola, end of quantitative easing in September of 2014.
Gotcha.
So that's kind of the more active, yeah.
And now, just before you start getting into some of the stuff you look at, I'm sure when you started trading out of the gate, was there a particular style you were trying to trade? Was there a particular strategy? Were you more of a day trader? Were you looking to swing trade? And then if you could go into how how you've developed your strategy now, how'd you come into your strategy now from where you were initially, so some people could get an idea of sort of what you went through there.
Yeah, absolutely. Yeah, no, so initially I actually did, and I've heard a lot of not beginner traders, but when they're starting out, they the occasional one will have a good productive run to start. I got a little bit lucky or fortunate, whatever you want to call it, in that time period, and kind of knew the markets were going to roll over, and so I did pretty well. I don't know if that worked in the short term. That probably worked to my detriment, as you probably know.
Right.
But it's good. I mean, long term, it was great because you got to see the benefits early, kind of got the lay of the land. And then speaking to your question, I initially was doing more, probably I'd say swing trades of probably 36 to 72 hours. Was kind of where I made the bulk of the money. And it's funny how, as you go along, you can actually develop more bad habits and get away from some things that early on you actually had it right. And so I think after an early productive blip in 2014 into 2015, did okay, but was choppy a bit. Had to kind of go back to find that my actual niche was probably better in right around, a day and a half to 2.5, about 2 days overall. Kind of 36-hour trades was kind of my little niche.
Right. So that's that short term. There's no real name for it, right? A short term, nimble type trader, right? You're not looking to build any substantial position over time. You're looking to get in, get out. The quicker you could do it, the better. But you want to make some decent money in the interim. Yeah,
exactly. And I mean, there's a couple lessons that I've learned along the way that in regards to patience and that kind of a strategy just being extremely key. And you've talked about it a few times on your calls, but I can't reiterate for everybody how important that is for my success. That when you really the advantage that we have as small traders, in my opinion, is that we can be nimble and we don't have to trade. We don't have to. There's no kind of quota we need to meet or whatever. So I think a lot of times, and this is where, just so you know, a little update too, and I apologize if I haven't been quite as up to speed the last few weeks. I had kind of a real estate project, and I recognized the markets were a little bit choppy, and so I kind of pulled back about 3 weeks ago and just focused more on real estate stuff, just because I knew we'd be a little bit all over the place here for a while. So
got a little bit tougher, exactly.
Yeah, a little bit tougher. So being selective, and I took a few fun things here and there, but yeah, again, patience pays. Rule number one.
Yeah. So, and I was going to ask you that one piece of advice, because I've never. I listen, all the traders I've been around prior to, me getting together with the Lucci gang and doing this, they were all basically on the professional side, managing client money. So I never really spoke to new traders in a sense, right? New investors I would speak to and stuff like that. But one thing I realize is, a lot of people come into this game and instead of trying to focus and learn on some of the most important things, like, see, you're sharing and reiterating something I try to harp on a lot, that when you initially start off in this game and you're trying to get a feel and develop a style, that allowing and waiting for that setup, waiting for the right opportunity is just as important or more important than, stock picking or anything else for that matter, right? Because a lot of people think they could just come in every day and find something to buy or short, and they're going to make money doing that. And I'm sure you would agree that, that couldn't be further from the truth.
Oh yeah, forcing a thesis. That's a sure way to go to zero on your account pretty quickly. So
yeah, and guys, that's why I'm not trying to sound like a preacher or a teacher here, but that's it's easy to get caught up with the noise every day. Like if you're a swing trader, you heard what Tim says. He had to step away from the market because he knew, things would get a little more difficult. And coming in every day if you know you don't have the discipline to handcuff yourself, right? You're going to be itching to buy or short something, and you know it's not the right time to do it. Sometimes the best thing to do is step away. Okay, but you know, a lot of the times the most important thing you got to acknowledge if you want to be successful in this game are the things you need to do and the things you need to avoid doing to find success.
Self-awareness is really key.
Yeah. So if you can, you got the screen there, and I just wanted to, because that's what I found interesting of and one of the first thing I noticed when you happened to come in the room and we would talk a lot. I would even pick your brain because I know you're a big fan of, you know, technical analysis in the sense, right? Charting. So share a little bit about what you look for now and how the flow plays into that, if you can.
Yeah, absolutely. Absolutely. So I kind of incorporate kind of three main kind of bigger concepts into my trading. And I think, you know, one would be kind of some basic technical analysis, and I've kind of narrowed it down to a few patterns. And then I do incorporate a little bit of, you know, open interest strategy, which I think you see me post from time to time and talk about. And then obviously probably the most important is a lot of these, you know, a lot of the flow, incorporating that in. And when you have all three line up in the same direction, that's where you can get some, you know, some real incredible home runs and whatever. But
so now so are you looking for, is it something where you're looking for specific technical patterns? What are you, I'm just curious. What do you have a chart? Let me see what your charts look like. Or
yeah, so I can go over a couple examples of kind of what I look for.
Yeah, sure. Definitely.
And just, you know, to finishing up that background just for 2 seconds, you know, so it took me about, just for like especially for the new guys in here, even guys who've been in for 7, 8, 9 months, you know, again, that the flow is not, it's not a science. You can't follow every order and think how to make money, right? It's an art. And so it's been fun because to finally get it. And I think a few weeks, Lucci and I were talking, it was probably 6 weeks ago or 8 weeks ago. I was like, man, a whole nother level clicked for me. And it's like, I probably didn't learn how to incorporate the flow, honestly, after watching it every day for probably for 7 months, 8 months, until it really incorporated. I knew it, sunk in. I knew what to really, again, what to focus on, what not to focus on, you know, and that's the tough thing for me is to really eliminate seeing a lot of the successful traders in the room too hit some crazy home runs. You're like, hey, you know what? You got to be happy for them. But if it's not part of your strategy, you just got to look the other way.
Right.
So, but let me go into a couple charts that I was looking at here. Just some examples. They're not probably from a few weeks ago, but I felt like they were really good to show.
Yeah, just to get an idea of what you're looking at and stuff.
Yeah.
Like
so if you guys remember the WYNN explosion from a little while back, here's an older chart here. So if you
that was off the Fed lows, right? You're talking about? Is that
yeah. And so we had this really kind of massive support line here, right at kind of 160, I think 70 was the exact line. And I'll pull up the order that came in right here that I notated. This, again, it was a block buyer, so it's probably not as strong as a sweeper, but I did feel like based on like where the guy bought it right as it was testing major support, and the guy came in and spent a bunch of money back-to-back orders here, and you can see kind of where I notated. I got in for a little bit, but again, he paid $675 in that option. That was on 3.5, and a few days later it's at $24. So
yeah, and let me just cut you off 1 second there because you mentioned something that's important in regards to blocks and stuff like that. And that's what because here's the thing. A lot of guys out there, they just want to trade the flow off the flow itself, right? Like Tim does something that I recommend a lot of traders try to learn to do because you learn a lot of things in this game and they're not all useless just because you haven't found any consistency. Like Tim said, early on in his career, there were a couple of things that actually he should have hung on to and would deviate from because of all the noise around him. There's a lot of things you hear and learn throughout your career. Some are very important to hang on to when you put certain things together. Okay. And when I talk about like the sweep, for me, if I'm trading just off flow, I want to see aggressive sweeper activity, right? I want to see the best of the best action come in. But for Tim, who's doing some analysis behind the scenes, he's using the flow as confirmation, right? So he's looking at it and saying, all right, I got a setup here. It's already set up. All I'm looking for is the smart money buying to confirm what I see right here. That's basically what Tim's looking for. Okay, so you don't necessarily, when you're doing this type of homework, you don't need to see top shelf activity and use that as a confirmation. You could use exactly what Tim is doing here and find a lot of value out of it. So go ahead, Tim. I didn't mean to cut you off. I just wanted to.
No, not at all. Not at all. So you guys can see, I think the sweeper came in on 3-5. So it's like one of these candles here. And this is obviously the older chart up top. And then you can see the day that it kind of broke this trend line here is the day that I got in, I think kind of midway through, and it had a great pop. Actually went up to, I think, mid 180s or 190s or something, and did really well. Yep. But again, that sweeper, or that block rather, led the way. And I think, again, pairing some technical analysis, already looking for that breakout, like you said, seeing the confirmation of that guy coming in right at support, like right where I was about to actually short, and this guy comes in and goes the other way, and I went, uh-oh. Like, okay, wait, peel back for a second here. So I've done that a few times. It's saved me some, it's either saved me money and or made me some money, which is great. But and just a quick side note too, just the if anyone, I've got a lot of details on kind of how I really interpret the flow that are a little bit longer winded than maybe just on here. And if anyone needs any help or whatever, I'd be more than happy to email something over and spend a couple minutes with you, over email or over the phone. So in the chat room, hit me up, and I'd be more than happy to kind of go over the real details of what I look for.
You guys are asking who's speaking. They came in late. This is Denny. This is Tim from In the Room, option trader. That's Denny Crudding. You probably yeah. So this is Tim. He's a member of the Steam Room, very active. Has been a little quiet the last couple of weeks for good reason, because it's a choppy market. Like he said, anticipated a little tougher time ahead, so try to tone it down a bit. Ranchero is calling you an outright degenerate, just FYI. Ranchero.
I'd expect nothing less, so I appreciate it.
But yeah, anything else so the thing is that what I wanted to see is you keep it pretty simple though, right? Like your technical analysis is pretty simple. You're not, there's not a million different things, the if, ands, or buts. It's basically support or near resistance, and you're looking for that confirmation type thing. You're not getting too cute, right? That's what I was curious about.
Yeah, no, and when I do, whether it's in the room or that's my weaker moment. So we all kind of need to stay closer to our strength, but that's definitely not where I succeed more. And if you do, it's weird because if you do succeed, at least in my thinking, the scalping and it is a little bit kind of degenerate, and it's a little bit like at the end of the day, yeah, you can make some good money, but I think the bigger money for me has been made in capturing these bigger moves over 36 hours, or every once in a while, maybe 10 days and a little longer.
Oh yeah, that's for everybody. I mean, that's for everybody. The bigger money's there on the swing side, even more the position side, right? Even a little bit longer. The issue becomes there's more risk involved, right? And if you don't have some sort of risk management plan, right? Or you are a degenerate like a lot of us are, that's where things can get a little, you get a little frisky and blow yourself up. But, without a doubt, the bigger money is holding overnight. Otherwise, what would be the incentive in even taking the risk to hold overnight? But just another thing I wanted to mention too, Tim, in regards to stuff. See, and let's take the WYNN, for example, because I know a lot of guys out there. I used to say the same thing. We show, or a lot of people out there have the tendency to show when things work out and not when they don't work out and so forth. But here's the thing you got to understand, okay? Just cause WYNN caught some wise guy activity and was set up technically for Tim doesn't mean that he was guaranteed a winner, okay? Doesn't mean he's guaranteed a 95% win rate off of even staying disciplined just for this, okay? The way to look at it, and that's what I stress, you guys know, I stress to you guys a lot of times, the right way to look at it, and this is where I think, like Tim was saying, he started to see things a little more clearer, not taking every single alert as actionable and seeing more of a big picture thing. If Tim had a setup here like he did on the WYNN, okay, and it was out at breakout range there, right? It was either going to hit resistance, come, fall to the downside or break through there. The wise guy activity, if there's 50-50 chance that that thing's going to head and break out or, fall back down to the lows again, if it's 50-50, the probability there, with wise guy activity behind it, right? With the smart money buying behind it, it tilts the odds just a little bit. Even if you say it doesn't even tilt it that much, let's just say even 60-40. In my opinion, when you're seeing legitimate action, I think the probability and the odds go up even more than that. But let's say 60-40, right? So you got call buying coming in at resistance, and now all of a sudden went from 50-50, 60% chance it could break out, 40% chance it doesn't. That little bit, guys, okay, that little edge, and that's what you hear a lot of professionals consider an edge. That's an edge. An edge is not a crystal ball. Okay, a lot of you guys think an edge is a crystal ball. It's the furthest thing from that. That's an edge that people look for in the markets. And if you manage your bankroll properly, you manage your risk properly, over time, net, consistently, you're going to have more winners than losers. Okay. And we went over this in the Saturday webinar as well. That's when you start worrying about your size. When you come to the point where you believe and you have the confidence that your edge over time, you're going to have more winners than losers, that net number. That's when you find a way to size up. That's when you worry about the size and start thinking about the money, the profits and stuff like that. Okay, but you got to get to that point first. Okay, and the little things like this, I think, are the brickwork or the foundation to getting there. And like, for example, I could tell already, Tim, you probably were successful prior, right? You were making some money as a trader and so forth. And you look at this now as what this could only make you a better trader, right? It's not that all of a sudden you're going to become some undefeated stock picker out there.
No, and it actually, ironically, it speaks to your point. I went back and did some kind of research on my performance history, and the best month I ever had, I actually had a win rate of only 30%. That was my best. And I've had months where I've hit 90% trades, but my best month on a P&L basis was when I hit 30% winners, because I let those few winners and I banked on those and let them ride properly. So that just speaks to, so
part of the risk management, right? That's Absolutely. The whole limit your downside thing, and you let some winners run and you get a little lucky. And that's ridiculous, 30%. And like you said, you probably hit at higher clips than that, I'm sure, throughout your career. Norris is asking a question, Tim.
Sure.
You mentioned you use technical sweepers and open interest you apply as well. That's what he's asking about. Norris in the room.
About the open interest?
Yeah, can you talk a little bit about that?
I can speak to that for a second. So,
okay.
The way I used open interest is mainly, I have a few colleagues that use it more on individual names with some accuracy. I personally use it more just on the indexes, namely SPY and the Qs primarily. But if you look at the open interest for the week, and let's just say, there's 100,000 open contracts for, let's say, this Friday. On the put side, let's say 258, and then there's 5,000 below. Looking below that, 258 and below, there's nothing of any size until, let's say, 253 or 254, and there's maybe another 100,000 down there. The way I use it is just knowing that going into the end of the week or any expiration day or near one, if they hold it on the put side, specifically, if they hold it below that high open interest, that there is a very high likelihood that could waterfall to the next, node, so to speak, of high open interest.
Yep.
And that's where you get what's called, for some of the newbies, they don't know, but it's, delta hedging. So the market makers eventually kind of have to throw in the towel, and that's where you can get these flushes. And so just being at least aware of that kind of stuff. Again, on the put side, and then obviously on the call side, it's opposite. So just being aware of those different levels. And I've mentioned it a few times in the chat room and posted, a few open interest kind of charts and stuff. If people need those, I can post them. So let me know.
Yeah, and it's funny. A lot. I've been I've always known traders looking for the pin on SPY, especially during monthly expiration and so forth. And more, I've been hearing a lot of traders utilize open interest the way you just explained it, kind of, and almost like they breaking through a support, kind of, right, where it breaks through.
And actually, here's a good example. Yeah, so Lucci and I were both, I think, looking at this. This was, I think, about a month and a half ago. There was just, and there probably still is. I haven't looked at that high recently, but there was monster open interest on the call side at 280 in the SPY, and I think it got up to 279 or something on a bounce, and some 278 and change. And I figured, hey, there is such a little likelihood that's going to break through and hold that level. That was a good time to, especially after a monster run. It was a great time to sell that premium. And that's another thing too, kind of taking a broader step back, that I would really encourage the newer traders to really think about selling some spreads to start. And you're probably not gonna, make a killing, but you're really gonna develop the right habits and see that selling options primarily is gonna be a lot better way to go over time than picking directions. Again, I try to stick to, maybe 60-70% selling options, but it's probably more like 50-50 to be fully honest. But selling options is such a better way to go over a long period of time.
Yeah, and that's another thing too. We have more and more traders doing that as well. Lucci's a big proponent of it. I think what happens, you know what it is, Tim? A lot of the newer traders who are trying to get a grasp on strategy, I don't mean this in a bad way, demeaning way, but they don't fully understand options. It's almost like, I don't know if you looked at Robinhood. Now you could trade options, and they had calls and puts, and they had to change the wording on it from buy, bet higher or bet lower. And think about that for a second.
No way, really? Oh, that's kind of funny.
Yeah, go check it out. I couldn't believe my eyes. I almost lost my mind. So it's almost like, for some of the newer players out there who were getting into the option world, like even buying calls, buying puts, they couldn't comprehend that. And they had to reword it to get a better understanding of what that meant and put it. So I agree with you. Ranchero, who's taking a couple shots at you, is one guy in the room who likes to do that and does that well. But I think for a lot of newer traders, they don't understand the option world well enough as far as on the premium end to do that. And I think that's why we don't talk about it enough in these webinars. Lucci offers courses and stuff like that. But I think that's why we solely stick with the directions and so forth. What else? Anything else you got on there that you wanted to show us today? And then we'll take a couple of questions they're firing at us.
Yeah, absolutely. I've got one more that you'll definitely remember. I know Lucci would have if he was on here.
I remember all these things, but go ahead.
Okay, so it's going to pain me because he said people only choose their winners. This one was I took some lunch money off the table in front of a retirement trade, so that was not the best situation. But I want to show it. Because you know how rare these sweepers are in Priceline or Booking.
Yep.
Yeah. So this was, again, another setup that I actually had. I had this white downtrend line here previous to something I was watching, and then right about here, it's not exact, but right about there, we saw that massive sweeper come in. I think it was about 300,000 and change come in.
Yeah.
About 10 days, 10 days till expiration, and I got in and wrote it for, I think, just this initial pop right here. So I think I sold for, I think it was like 12 or 13 bucks, whatever it was, for 40-50%. And I
remember this. It didn't stop after that. I remember
it. I think it was like at 160 or something stupid. I think at one point it was hard to look at. But the good news is that I'd love to kind of share with some of the newer traders is that, again, seeing something, learning which names, like interpreting the flow is one thing, but also knowing how the flow affects certain names. I think it affects them differently. And I mean, if you see, I know we always get, Lucci and I get excited if we see an Amazon or Google sweeper. Those are more rare. But again, Priceline's like the rarest of the rare,
or even a name like WYNN, they clean up in WYNN. I mean, more than not, there are a lot more winners. And I honestly can't remember, again, as far as the trade, any legitimate action that recently off the top of our head on the call side and win that was a loser per se. So I couldn't agree more.
Yeah, yeah.
Yeah, and guys, and what he's trying to say there is like for it's a lot bigger than that too, where there are names out there that catch, and I guess this comes from experience, and like Tim is saying, some of the stuff you learn along the way, but there are names out there that catch activity, and the activity is so common that it just, one or two sweepers in the name is not going to make a dent. Okay. Now, yeah, you could use that if as some sort of confirmation indicator if you're seeing something else on the charts or whatever the hell you're looking at, and you use that as confirmation. But Tim brings up a good point. There are names that you're going to get some sort of momentum created off a sweep. A couple of names come to my mind. This booking, the price line is so rare that when you see it, it's worth a shot in itself. WYNN, I know a lot of guys in the room that'll vouch for it. WYNN is a borderline lock off call sweeper activity. SRPT, a biotech name.
Yeah.
Anytime we see sweepers there, they're ridiculous. So, it's getting a feel for the action. And I think that's one of the most important things. And the only way you can do that is, by developing some sort of game plan or strategy like Tim's showing here. Let me get to a couple of questions here.
Sure.
Lanchero saying they're like 8-0 in their last 8 in WYNN on Wiseguy activity. Honestly, it might be close to that, Ranchero. I don't even think you're exaggerating. They've been ridiculous.
Yeah.
David saying, do you have a short list or you trade pretty much? This is a great question. Okay. I'm going to reword it a little bit differently, but this is a great question. I get a lot, especially when I mention guys like you or anybody else in the room who trades a specific strategy. Are there a set group of names that you're watching, that you're charting? In other words, try to give them a little, paint the picture of what you do behind the scenes. Do you have a watch list, a set group, list of names?
I'll start really, really broad. I'm kind of more of a lifestyle trader. I travel a lot, enjoy the time freedom and the financial freedom it brings. So I could grind over 300 charts. I have some buddies and colleagues that do that. That's just not me. So
right.
I probably have 20 names, a couple of the high betas, and then some banks, and I could send over exact lists for most of the guys, but if they want one. But yeah, I kind of have about 20 names that I follow, and then I'm always obviously aware of any type of order that comes through. If you see some monster come into a name,
right,
I'll step in.
So basically, you're focusing, and this is kind of what Lucci and many guys do in the room. You're looking at the big guys. For the most part, you're looking at the most liquid, which makes sense. If you're looking, guys, if you're actively trading options like Tim is doing, where especially swing trading, day trading, whatever the case may be, you got to make sure those options are liquid. Otherwise, you better understand that whatever you're putting in them, you may not get back with the spreads and everything else out there. So he's focusing on some of the bigger names. If he sees a rare sweep like in the price line, the options are a little fugazi on the price line, but it's so rare that he looked at the chart, he saw a rare sweep, it was worth a shot anyway. And another guy's asking what is basically your homework. So is it a nightly thing that you go home and look at these charts? Talk a little bit about your work on a day or weekly basis.
Yeah. So I think on those 20 names, I pretty much know the levels when I'm actively trading. So like again, these past few weeks, I've known a little broader levels, haven't been quite as active. But when I'm trading actively, those 20 names, I'll know at pretty much every level. I keep track of all the sweepers that I want to be aware of
right.
in those 20, and then. So I'd probably say on an hourly basis, I'd probably give it about an hour and a half, 2 hours a night during the week. And then the weekends really kind of when I make my bigger money. I usually carve out, 8 to 10 hours on a Saturday or a Sunday, really go through weekly charts on probably not all my names, but probably 100 names. And
you dig a little deeper on the weekends, in other words, right?
Yeah. And I've actually found too, especially because I do trade some long-term stuff in my IRA and stuff, and I found those weekly moves are just as profitable and a lot less stress sometimes. Obviously, not in this market's a little bit interesting, but
Right.
when we get a trend developing again, it can really be a lot less stress to just to look at just a weekly chart and really not pay attention to day-to-day action.
Yeah, it blocks out a lot of the noise without a doubt. And and it's great that you mentioned that too, because a lot of the guys, even the guys I've traded with, back in my broker days, all the guys around me that used flow and use it successfully all had some sort of homework involved. And guys, listen, if you don't have the time for it, like Tim was saying, or maybe you want to enjoy other things in life and not be some sort of nut job like me where I'm just live and die and breathe these things. I mean, you got to structure something that suits you best. But the point I'm trying to make is, like, there were guys around me that every night, one guy I remember still to this day who really does well, he looks at Elliott waves. Now, don't even let me start getting into that, because I know 1, 2, 3, 4, 5, and 1, 2, 3, and 3 is the biggest and all that stuff, but I don't know the details. But he's looking for a specific pattern in Elliott waves, okay? And every single night, I don't know if he's scanning for them or he does it one by one, like Tim has a set group of liquid names, high beta names, whatever the case may be, and he's already got mapped out. Okay, here are names that are set up on the long side. Here are names that are set up on the downside. He's looking for call sweeper activity here. He's looking for put sweeper activity here. And the work is already done for him. So he's coming in to the session. He's not looking around, firing at anything that he sees just at the moment. His work is already done. And when the action come in, he's ready to fire. So the point I'm trying to get at is, I know a lot of you guys use technical analysis. I know a lot of you guys use charts or Fibonacci's or whatever the case may be. You go home, you breeze through some of these charts, or like Tim said, on the weekend, and you're set up already. You have an idea, you have a game plan of what to look for. And that's when things become, a little more clear for you throughout the week. You can block out some of the noise and try not to get yourself wrapped in all the nonsense out there. Now, the one thing I want to stress, though, Tim, because I know I make fun of this when people mention it, you have to have some sort of risk management involved, guys. You have to. That's the most important thing, okay? Because every single trader I know, the successful ones I'm talking about, that trade successfully, one loser does not wipe out 6 winners. It can't work that way. You know what I mean? You have to already have some sort of game plan in place, a structure in place that says, okay, if I can, like Tim was saying, if things worked out well, he only needed to hit at a 30% clip to make money. You understand? Any higher than that would have been gravy. So you have to have some sort of structure in place that allows yourself to lose. If you can't find something where you allow losers, you're dead before you even get started. So I just want to drill that point home.
If you're just arbitrarily setting position sizes based on your feeling of the moment, like there's no hope. So
yeah, and so let's get to a couple more questions here before we wrap it up. Eric saying, any particular setups that you're looking for per se? Is it just support resistance? I guess he's getting at, are you looking for breakouts? Are you looking for names that are at support resistance and you're looking for that confirmation to tilt the odds in your favor? What are you focusing on primarily?
Yeah, I mean, we're still in a bull market, so you want to be looking on I would say on the breakout side. Although being kind of fully honest, I probably have a little bit of Lucci in me where I probably get a little bit more excited when I see a good short for whatever reason. I don't know why.
Why is that? I don't get it. Why is that?
It's probably because I think I'm pretty naturally contrarian, so I just like that. Every once in a while, I don't know. It's fun.
All right, I guess.
Yeah, but as far as patterns that I look for, I mean, you want to stick to really want to stick to the basic patterns. But I think a lot of the wedges for me have been really good because you're showing consolidation, and then again, if you pair consolidation with some sweeper activity, that's where you're really going to see a higher success rate. So that's probably the best. Anyone who wants it, I could send you detailed stuff. But as far as 1 or 2 patterns, I'd say wedges, and I would look for more breakouts than breakdowns. You know, on a macro basis.
Perfect. All right, let's see what let me get to a couple more questions here. Khalib is saying, are there expiration times that you wouldn't care if you saw sweepers go off on? Oh, in other words, is it a preference thing as far as expiration on the sweepers? In other words, I think this is what he's trying to get at, because I get this question a lot. Let's say WYNN, for example, right? You had set up over there, you're looking to see if you could get a little bit of an edge off sweepers direction-wise. Did it matter if they're sweeping weeklies or 6 months out or something?
Yeah, so
that,
that's a really good question. Yeah, no, that gets into the details, but definitely I'll give you a little insight into that. What I've seen is on the index side. You know, I personally, the best thing that I look for is those million plus sweepers that come in, and if they're rare, but when you get above the ask, and we've posted it a few times. I wish I had kind of backed up the research, but I know early on in the year there was a couple in January, 2 or 3 days before things fell apart. And
the put guys, yeah.
Guys,
I remember that.
And so that's and a couple more above the ask, and they were monsters. They were $2 and $3 million orders, and so that's kind of what I would look for. I wouldn't go. For me, I don't like looking more than 3 months out. It's good to know for my IRA account, kind of longer term trades.
Exactly.
If they're going farther than that, but for my short term stuff, I want to know someone's betting within kind of that 90-day time frame.
Yeah, and I would just harp on that. If you're a short-term tactical trader, okay, like I said, if you're an investor or you're more of a trend trader type of person, you can look for stuff further out. But you know, even for me, for swing trades, I don't mind going out a couple months. But if you're looking for that move over the short term, you want to see some action, you know, dated over the short term. So in other words, I'll give you an example. Let's say right now, today, we see a guy come in, July missile, okay? And it's a missile. For me, that's still something that's going to get me excited, okay? But if I'm going to base a trade over the extreme short term, you need to see, even if they're smaller, you need to see some, you know, maybe a month or two out or something like that. Weeklies get tagged. They don't have to be the same size per se, but you want to see that action there. So at least it's giving you a heads up that this thing is in play now. Because what happens is if you're playing, let's say, breakout, okay, or coming out of consolidation like Tim is talking about, and somebody goes 7 months out, okay, and it's a really bullish bet, but it's 7 months out, you know, that doesn't necessarily mean you're going to see that momentum right here, right now, over the next week or so. Okay, so even though it's a big bet, even though it's a good-looking bet, it might not get the job done for what you're looking at. All right, so you want, you know, I would say as a gauge, if you're trading the way Tim does, I would say probably 3 months, 4 months is the furthest you would look. You know, anything outside of that, I would definitely look for action smaller than that.
And then on the near term too, Jesus, I think what I look for on the individual names that I trade, especially the 20 more active ones, I look for those weekly or following week sweepers that are at the money or slightly in the money. Those are like just the bread and butter for me, and they have to also be over 100K. So I do miss some. I miss some smaller ones that still hit some big home runs, but I just have tend to found that
the size there.
The size is better. It's just over that 100K amount. It's then repeated at the money.
And the thing, and the reason why I think you found that you like those a little bit more for your style, the smaller $50,000 sweepers that come in, they can create momentum today on an intraday basis. But if you're looking for that bigger move per se, you know, these guys, they flip $50,000 orders like they're hotcakes, you know, so you could have guys flipping, we see it plenty of times, they flip them intraday. They're just trading ranges and trading. So I agree with him. You want to see decent size. You know, if you see $10,000, $50,000 sweepers, that, you know, ultimately is just as good. You want to see some sort of real commitment there, and I think that's what Tim is getting at.
Yeah.
What other? Hold on a second. I don't want to skip over any questions here. How many? Well, this is a question that I really I see a lot of people ask it, but I really think you're not going to get this answer. You could get an idea from others, but you're not going to get an exact answer from people that's going to apply to yourself. How many trades do you make on an average a week, and what percentage of your account are you risking per trade? Like for me, and then I'll throw it over to you, Tim. I think this is something that you, as an individual, you have to work on, and you got to understand, what type of risk you incur, what type of bankroll you're dealing with. If you're dealing with a smaller account, you have to be obviously a lot more selective. You may not be able to trade as active, obviously, as Tim is. So I think that's something you can ask the question and get an idea from others, but ultimately the answer is going to come from asking yourself the questions you need to ask. Go ahead, Tim. What do you think on that?
Yeah, no, I'd primarily I'd agree with you. Yeah, I think so. So for me though, I think when I'm in kind of my active account in my best trading, I think I probably have, let's say, 7 to 12 positions on at any one time, and then probably holding. I'd probably intraday trading a third of those type of thing, and then kind of rolling out and like you said, kind of massaging some of the bigger positions. But
so you have maybe a couple key swing positions, and then there's stuff you're trading around that kind of thing, right? Where your intraday stuff and stuff like that.
Yeah, and again, it's like one of the things that kind of, again, part of the nuance of the whole reading the tape and the flow is just I've recognized a lot of the big monster blocks and sweepers occasionally, or actually more often than not, rather, will be a couple days early. So I usually won't jump on it initially on those bigger ones. I'll usually try to wait at least a day, and then at least buy a third, and then maybe buy another third or add half or something on that day 3, and I've used that to my advantage quite a bit. So
right. So are you trying to get a better cost? In other words, maybe looking to buy weakness or something that piece into not at one level? What's your reasoning behind that?
Yeah, especially if the order's into weakness. Yeah, I mean, I think I don't know, it's just something I've noticed in tracking all the noticeable orders over the last year plus. Just noticing that oftentimes they're a little bit early, and what it does, they're trying to maybe flush out that last little bit of crowd. And I would think that a lot of the novice guys and the first few months when I was in the room, I got traded out, and then what would happen? The move that you thought would happen happened exactly the way that forecasted.
Your hair out of your head. Yep.
But they had one more rug pull or one more blow off, depending on which way you were looking. But there was one last move the opposite way before it kicked in. So it's you don't want to let that affect you. And that goes back to position sizing again, and again for those guys with smaller accounts. Sometimes you do unfortunately have to take a little more risk. People say you don't have to, but if you're only trading $5,000 or $10,000, I personally would. This may not be the best advice, but I would personally bet more concentrated and
Oh yeah, I think you have to in a sense. I mean, the only thing I think you have to be more selective and more concentrated. Otherwise, you're not going to be able to stick around. I think being so spread out and so forth. But a lot of people are trying to build their account. But one thing I will stress is that and you hear it from Tim, you hear from a lot of guys. You ask anybody who's in the room and has now found, starting to gel in a sense. When you first start off, you don't want to try to break the bank initially. A lot of people, they just want to come in, go for the gusto, and sometimes they get lucky, they make money, and they think they found God. You know what I mean? Or a lot of times they'll lose money and say, "Oh, what is this shit? This flow? It's useless." You want to come in and you hear it. I've heard it at least 5 or 6 times now out of Tim's mouth. Just something I've gotten a feel for, just something I've learned by watching the flow. I can't stress to you how important it is to just come in and watch the flow on a day-to-day basis in different market environments and stuff like that. What names, how many sweepers does it usually take to get some momentum into a name? How do these names perform? Do they perform better when they're bought into weakness or green? All this stuff only helps and increases and tilts those odds in your favor that much more. You know what I mean? To help you in that P&L at the end of the day. So these are when you come in and you just starting off, which I know a lot of you are out there on the webinar. you want to take a step back in a sense and at least pay attention to the flow. You don't want to get so wrapped up in the trade and money that you're missing what you should be learning out of the flow on a day-to-day basis. I think it's important.
Please do not even look at your intraday P&L. That's just death for young traders.
Right. Yeah, so many people do that too. As a swing trader, they see a stock down on one particular day, they think it's game over, and then the next day the stock is snapping back and they think it's flying to the moon. I know it's tough as a swing trader when you're in front of the screen all day. It's not easy to block out all that noise, but you have to try your best to do so. Otherwise, you get yourself in trouble. Paul is asking, Tim, were you ever a small account trader? And if so, what were the pitfalls? So yeah, basically saying, did you start with a pretty small account initially?
Yeah, totally open on that, Paul. I started with 10K in just again because I kind of recognized a short-term opportunity, didn't know where it would eventually lead, but I started with 10K in September of 2014, and then I again got a little bit fortunate, or however you want to call it, and kind of 8x'd it within like 7 weeks. I mean, it was just that rollover was pretty fun, and I was pretty aggressive, and then got the account pulled back in half, and then kind of went through the process of kind of learning what was my niche, and then deciding, hey, this is a really good vehicle for some time freedom and financial freedom, and have some fun and be able to travel and just work off the laptop. So I threw a sizable, kind of amount in there afterwards, and kind of just ran with it since. So.
Yep. All right. I got another good question here from Eric. I get this question a lot. Is there a set number profit-wise or percentage-wise, or are you looking at just price action when, let's say, you're pulling the plug or taking profits? Is this something? I think I have an idea of what you're going to say, but I get this question a lot.
I may surprise you here on this one. So there is, like I obviously just mentioned earlier, like don't look at your P&L intraday, but as part of what I've seen historically off the flow, I do have some levels based upon the order type. So I'll give you one example. So if I see an order, let's say it's like something's got, maybe like even like a CVX or something has gotten killed, and you see a guy, it's down 6 or 7%, and you see a guy, 3-4 months out come in for $4 or $5 million block. Again, I have recognized those orders to be good opportunities, but a lot of times, especially if they're deep in the money, for example, right, a lot of those are not like, you're not going to be looking for a triple from deep in the money. I do look for like a more conservative 25% or so, and then I can kind of reassess, but that's usually what I look for. But it's all based upon the order itself.
Interesting. See, I thought you had levels on the chart or stuff like that you were looking for. So the order does matter as far as what you're looking at, as far as targets and stuff like that. Yeah.
But then again, you look at the chart and you see certain levels, and if it's blowing through levels, you act accordingly. But that's kind of.
Yeah. But you have an idea. You have an idea before you press the button. You have an idea of what.
For example, that price line order. If we see something like that again, I'm not going to look for a scalp of $1 per contract. I'm going to be a little bit better about looking for maybe like a double, or at least something I can have fun.
Well, I'll tell you, like Eric, there's no magic answer on that question. Again, that's one of those questions, because I'll give you an example. Okay, in this market, this environment we're in right now, I think you have to be ready to take profits. Like for example, let's say I just given an example. Okay, you catch a trend early on in the trend. Okay, for me, like that would be something maybe I let run a little longer or a little more than I usually would. Okay, as a trader. But let's say we've been going up here a couple days. The flow's still bullish. I'm still looking to play something. But I'm in the back of my head, I'm worried about this market topping out again and heading south. I might be quicker. Does that make sense? So that's the way I interpret things. Excuse me. And the environment has a lot to do with that.
Yeah. I think that's where you really should go, especially for the newer guys or part-time guys. I always try to keep the big top down market perspective in mind. Like, where are we right now? And that's why, again, I was fortunate a few weeks ago, and I haven't always done this, so please don't. I haven't been perfect. I've forced trades and I've made every mistake in the book too. But a few weeks ago, I just felt like, this is going to be chopped for a little while. It's not. There are opportunities. The degenerates don't want to hear this, but there are opportunities every day. But that doesn't mean that you should be trading every day. Sometimes it's best, both psychologically and just from a trading perspective, not to trade.
Without a doubt.
Yeah, I mean, I'm a big believer in, getting into some, the best trader is one who's kind of pursuing his kind of other life goals, and this is just a vehicle, and you want to make sure you're kind of improving yourself and doing other stuff that makes you well-rounded. I think that leads to better trading, just personally, is my experience. But.
Yeah, and just to harp on what you just said, I mean, hold on, I had coffee down the wrong pipe here. Excuse me. No, but again, these are things I think you got to take a deep look in the mirror and ask yourself these questions. You could ask me, you could ask Tim, you could ask Lucci. We may all have different answers, but some of this stuff, it's what makes you feel most comfortable, as a trader. And I'll just give you one example, okay? And this is coming from somebody who's been doing this a long time. At least for me, it feels like a long time, all right? I'm trading since 97, actively, 1997. And one of the things I've learned is that the short side, okay, and I know I'm going to hear the mumbling from Ranchero and all the characters out there, but the short side, even though there are opportunities there, and I would see the opportunities, like on a day like today, you could feel the market just melting down. Like this morning, after that Caterpillar conference call, the call buying dried up. You saw the put sweeper activity come in. You knew you could have threw a dart for a trade on the short side for at least a short-term scalp. You know what I mean? But I've realized that me looking to take advantage of that, would get me into bad habits.
Yeah, is it worth it for you? Is that scalp worth it?
Exactly. So maybe today I'd make some money playing the downside. But what happens now, I come in 2 days from now and, look to do that again. And then like you guys said, it's something about the short side. When you start making money on the short side, you feel invincible. Okay, you can see it happening right now. You see it happening right now. You got shorts making money the last couple of days. And eventually they're going to get cocky and they're going to get trampled. I mean, trampled. Okay. And so I've realized that exactly what Tim said. That is something that it wasn't worth that profitable trade for me to fall off the wagon, in a sense, as silly as that may sound. So it's true, Tim. You raise a good point there. Anything else you want to share before we wrap it up here, or any last advice for some new traders you want to throw out there?
Yeah, I'd say kind of define, and not necessarily financial, but define your goals before you kind of getting in and what you really honestly want. And that way you can then see, hey, what kind of time you need to devote to it. And I would, a lot of people talk about this, but I'd be very, very careful if you're looking for short-term riches. Doesn't mean it can happen or it can't happen. It can if you get fortunate and have a couple good runs, but it's really really important to have that patience and to not, the less you really need the capital that you have invested, especially in smaller accounts starting out, the better off you're going to be, the less stressed you're going to be. It's just I've seen too many friends blow up accounts that of 10 or 15 or 20, and they maybe needed half of it, or it's not worth it. So put some money aside where you feel like you can learn and you wouldn't be killed if you lose it, and that way it's a little bit less emotional when it comes to the trading aspect. That's the best.
Yeah, I agree. That's a perfect note to end this. Is one thing you see guys on Twitter, Facebook, social media, they portray a picture that you can see these thousands of percents and all this nonsense. And like Tim said, you could step in, let's say you started trading December of last year, right? Or at any point last year. And you could have walked into the perfect time to start off. and think you were, oh, this is an easy game, you know? Oh, these breakouts are working. All I got to do is buy Amazon every other day and I can make money. Eventually, you're going to get lumped up and hit over the head. So you're not going to know what you really have until you're tested throughout different market environments. Okay. You got to see what works for you in bull markets. When a market gets choppy, consolidates, what works for you best in that environment. When you're in all out full correction phase, what's a game plan? What works for you in that environment? I see Ranchero running his mouth that right now he feels most comfortable scalping. Like this is the time he likes to scalp. He feels most comfortable to scalp. You don't think the risk is worth holding overnight?
I would agree with him. Now is the time to scalp and not, that's why I took time off. It's either scalp with a little bit more stress or peel back. So I peeled back. But
yeah, but here's the point I'm trying to make, Tim, and for everybody out there. It's knowing that when you're in this environment, what you need to do to survive. That's what it comes down to. You understand? If you trade the same exact way in each and every market environment, especially as a swing trader, you're going to get destroyed. Okay, you're going to get destroyed. I mean, you have to understand, like in this type of phase here, that we're in a corrective phase. Some of the things that I like to share with you guys know I like to buy off weakness when sentiment's there at the bottom of the chop trend, as we like to call it, rather than the top. I feel like you can have more success, but it's about acknowledging where you are as far as the environment and what game plan, what's the playbook that you have to apply there to at least survive and make money. And Tim made a great point. That playbook, that page in the playbook may mean walking away. It could be as simple as that. Right now in this environment, I don't have a page in the playbook. You understand? I don't have a play for 3rd and 56 from my own 2. I'm going to run it into the line and punt it away. You understand? So you just got to have an idea. And that all is going to come with time, though. Unless you trade through different types of markets, you're not going to get familiar with that. So like Tim said, you take it nice and easy. You can't worry about the P&L. You can't worry about the money you're going to make. Forget about all those dreams they're painting out there, the 500,000%. Take it nice and easy. Learn your strengths each and every day, and then you just pound those home. But they take time. All right, everybody. Tim, thanks a lot for stopping by. I love sharing this stuff, especially guys using flow with something else, because I think it's important for people to see. If you guys have any questions, you know where to find me. For those of you new to the webinar, if you go to wallstreetjesus.com, most of you know you can get any answer to any question as far as what's a sweep. And guys, any guys who are new to the room, you might find it helpful. Hold on, let me pull this up, because I know a couple of you guys just signed up. Right here, strategy section. You go to wallstreetjesus.com, you click on the strategy section, and these are all short, quick blogs to read. They don't, on the bowl, you can read them literally. And you get an idea of everything, the terminology and what we look for, how we use it, how to use it for just sentiment purposes, stuff like that. All right. If anybody who's interested, we got a 3-day trial, no credit card required. So you get a 3-day feel of what we do here. You could sign up right there. And then the options, for anything past that.
Yeah. And Jesus,
right, guys, go ahead, Tim.
Yeah. Any questions that I'm totally open to help people out. So if they want to know kind of the more details of.
Oh yeah. Share your Twitter handle too, so people know who the hell you are on Twitter.
It's the same as the handle in the chat. It's just, it's option and then TR, the number 8 ER.
Okay.
And,
option with the number 8. So trader, instead of the A, he's got the 8 in there. He got cute.
And it's the same. Yeah, the email is the same too. If you guys want to shoot me an email, it's optiontrader@gmail.com. I'll help you guys out. So
perfect. I appreciate that.
Yeah.
All right, guys. Thanks for stopping by. Tim, have a good night. Have a good night, everybody. I'll see you the rest of you in the room.